Good morning and welcome to this Money Control live stream, a brand new week and the last working week of 2025. Of course, 3 more sessions to go before we bid adieu to 2025, and then of course we will be ringing in the new year 2026 this week itself on Thursday. So yes, the final lap, so to say. Week to date, in fact, a month to date, we haven't done all that well. If you look at the Nifty, it has lost somewhere around 0.5% or thereabouts. Hasn't really been a great month. Let's see 3 more sessions to go, whether the bulls can rise to the occasion, whether, the Santa rally that we, usually speak about at this point of at this time of the year, whether that really comes by or not. That of course we will get to know as we progress through the week. But the GIFT Nifty this morning hinting at a mildly positive start. So let's hope that after a 2-day losing streak, the bulls really managed to make a comeback and make this, last week of 2025 kind of, memorable, so to say. But in terms of, the year in rewind, if you look at our markets, the Nifty on a year-to-date basis has gained somewhere around 10%. But the year has been, extremely good for global indices. Both the developed ones and, the developing ones as well. If you talk about US markets, the indices are up anywhere between 15 to 22%. In fact, the S&P 500 hit a fresh record high on Friday and, very close to that 7,000 level as well on the S&P 500. So yes, that will be crucial to watch out for whether or not the S&P 500 managed to clock in that level this year itself or not. But talk about Asian markets. The markets out there have been roaring. So to say, it has been a rip-roaring rally for Kospi in particular, 72% gain for the Korean markets this year. Hang Seng as well, 30%. Nikkei, we've had a rate hike there, and the central bank there has also been saying that inflation is rising and it is approaching their 2% tolerance level as well on the upside. So till that happens, they will continue to raise interest rates as well. So despite that, we have seen the equity markets in Nikkei, in Japan rather, doing extremely well. The Nikkei is up 30% on a year-to-date basis, and even China, despite all the economic concerns, the markets out there have managed to outperform India by a wide margin. 20% gains for the Chinese markets as well for 2025. For Europe as well, it has been a good year, so to say, 19 to 20% kind of gains. But of course, for our markets, as I mentioned, just about almost 10% kind of gains for the Nifty. But the broader end of the markets have been suffering. The Nifty small cap index is down somewhere around 6 to 7% for the year, although the mid caps have managed to gain somewhere around 5% or thereabouts. So yes, for the Indian equity markets per se, not been such a great year. Returns have been uneven. It's been more about stock picking rather than broad-based gains. In terms of, foreign investors selling, of course, that has been a defining theme this year because the FPIs have pulled out as much as $18 billion in 2025 alone. In fact, for the month of December itself, they have pulled out somewhere around 14,700 crore rupees or thereabouts. So yes, how can one not talk about the precious metal basket when we talk about 2025? It has been a smashing rally when it comes to precious metals, gold, silver, even copper for that matter, record rally coming in on some of these asset classes. In fact, gold, if you talk about that asset class, it is slated for its best annual gains since 1979. So yes, that was the year in rewind, and I thought I'll take our viewers through that, given the fact that we are, just about looking at 3 more working days for 2025. Stay tuned, later on we'll get on board Feroze Azeez of Anand Rathi Wealth, who will be talking about the investment strategies for 2026. That's a big market voice we have lined up for you later on in the show. A lot of stocks and news. We'll take stock of them as well, the likes of Coforge, Titan. Those will be in focus. And of course, all your stock-related queries, keep them coming in. We will try and get them addressed as well. Quickly take a look at the top stories at the hour before we get on board our guests for today and start the show. Silver soars as China tightens export controls. Prices surge past the $83 mark but are trading with some cuts this morning. Gold, meanwhile, also hits a record peak, cruising past the $4,500 mark. Meanwhile, crude oil falls 2% on looming supply glut and hopes of Ukraine peace deal. US stock futures mixed after a largely flat close to Friday's session, but the S&P 500 managed to hit a fresh record high, and all the major indices clocked weekly gains of over 1% or so. And Asian markets are also looking for direction as investors kick off the final trading week of the year. The GIFT Nifty is indicating a higher start for the Indian market. Coforge will be in focus as it announces acquisition of US-based engineering services company Encora in a $2.35 billion all-stock transaction. The annual revenue of the combined entity will be $2.5 billion, and the management calls it a defining moment for the company. Defense stocks will also be in focus as sources say that the Defense Acquisition Council is set to meet today and is expected to take up proposals to acquire weapon systems worth nearly 80,000 crore rupees. All right, just taking you through the weekly action then. The benchmark indices ended with minor gains last week. In fact, the Nifty snapped a 3-week losing streak, although last two sessions weren't all that great for the market. But nevertheless, we managed to clock in weekly gains. The Nifty Bank Index was underperforming last week. In fact, it was lower for a third straight week. Defense metals, these were some of the pockets that did well last week. But of course, the defense rally kind of fizzled out on Friday because the DAC meet that was supposed to happen on Friday got postponed. And of course, sources are suggesting that that meet will be taking place today, and the Acquisition Council will be considering proposals worth 80,000 crore rupees. So yes, that meet will be crucial, and in the run-up to that, expect some action in defense names today. Shriram Finance, Trent, Coal India, Ultratech, so these are some of the stocks that were the top gainers last week. And Coforge, Bandhan Bank, Dixon Tech, Sona BLW, these were among the mid-cap losers last week. On Friday itself, the market ended near day's low. It was a muted session, and it is expected to be a muted session today as well, and in fact for the rest of the week as well, given the fact that that's something that usually happens when it comes to year endings, given the fact that the volumes are fairly low, people are on holidays, so the action is kind of muted. The Nifty did breach that 20-day moving average level in intraday trade, but managed to end above that. The advance decline ratio was again poor. It was 1:2 on the NSE. IT, auto stocks, these were among the pockets that fell the most on Friday. IT, in fact, ended in the red for the third straight session. Coforge, that stock will be in focus after that acquisition that it has announced. It is being touted as a bold move. If you look at the expert takes on this particular acquisition, Coforge, in fact, was slipping somewhere around 4% or thereabouts ahead of their fundraising meet that took place on Friday. Aside of that, if you look at some of the other names that will be in focus today, Titan, that was the top Nifty gainer. It was up 2%. In fact, the stock was at a 52-week high as well. The company will be launching its lab-grown diamond store today. And of course, it has plans to expand that going forward as well. But yes, this stock will be in focus once again. Foreign investors were net sellers to the tune of 300 crore rupees, in equities in the cash market. Domestic buying continues, 1,700 crore rupees worth of stocks bought by DIIs in the cash market. In terms of futures and options queues, put call ratio on the Nifty dropped further to 0.76 vis-a-vis 0.98 in the previous session. Talking about stocks that will be in F&O ban, no new additions or deletions, but Sammaan Capital continues to be in the futures and options ban for today. I just want to remind our viewers that there will be some new F&O contracts that will be available for trading from the 31st of December. Some of the stocks here would be Swiggy, Vari Energies, Bajaj Holdings and Premier Energies. These will be available for trading from the 31st of December. So yes, all in all, that's the setup we are looking at. Just want to see what we are doing in the pre-open. Well, in the pre-open, we are seeing mild gains coming in on the Nifty. However, Sensex is in the red. Of course, we'll wait for 9:15 to really see which way we start the trading week. But on that note, let me bring on board, Rajesh Palviya, Senior Vice President, Research Head and Head Technical and Derivatives at Axis Securities. Rajesh, lovely chatting with you. Final countdown, just 3 more days to go for 2025, and of course, then we will be ringing in a new year this week itself. What do you think? How is it looking like? We did clock in mild gains for the week last week. Last 2 sessions weren't all that great. Do you think the bulls would try to at least make some kind of headway going forward for the next 2-3 sessions?
Good morning. So we are end of this year, and we are close to the end of this year. And throughout this year, there was a lot of volatility, a lot of news flow across the globe, which market has witnessed. And Nifty almost gained around 10% year on year if we compare with the last calendar year. But looking at the near-term, short-term setup, Nifty is holding above the major put-based concentration, which is placed at around 26,000, 25,900, which is important for near-term trend to continue. If we able to defend this 25,900, 25,800 zone, I think trend is likely to exhibit on the bullish side. Yes, there could be some volatility would be there in the near term, but going forward, we believe that the kind of improvement which we have seen in the market breadth as well as in the broader market in last couple of weeks, we believe that sooner or later in new calendar year, there is a high possibility that Nifty may attempt to scale to the new all-time high, and we could see furthermore rally going forward. On the higher side, the immediate supply zone is placed at around 26,150, which is very important and crucial for next couple of days. If we able to take out those level, then some short covering action cannot be ruled out, and then we could see further higher levels. So at this juncture, we are advising here to hold the position with stop loss around 25,800. That's the stop loss one needs to follow for their long position on a positional perspective, and projecting target of 26,250. On the bank Nifty, there is a mild profit booking which we have witnessed in last couple of days, and bank Nifty is now trading below to 20-day moving average, so which is a sign of slight bearishness on the near term structure. But again, looking at the positional setup, it's still holding the major support area of 58,800, 700 mark, which is important for this positional perspective. If we able to defend this level, then I think here also we could see some buying interest to renew to come. And then if Bank Nifty crosses 59,200, then rally can extend further in the Bank Nifty also.
Okay, the rally could extend to Nifty Bank, but of course the Nifty Bank index has been underperforming in recent times. But just about 2 minutes to go for the markets to open. Any recommendations for our viewers this morning, Rajesh?
So Dalmia Bharat, we are focusing from the cement space, a very strong buying action in last couple of days, and stock managed to give breakout on the near-term structure. So we expect this stock has potential to extend its gain 2200 to 2230. We are projecting target for Dalmia Bharat on the downside. 2120 needs to keep as a stop loss. I think metal would be another sector where one can see the continuity of uptrend. Hindalco is looking attractive as the stock has managed to view breakout of its previous swing high of October 2025. So I think if it continues to trade above 860 zone, here also we could see rally to extend. 900 to 910 would be the next target. On the downside, 860 needs to keep as a stop loss. And third one is from railway basket, that is IRFC, a very strong breakout in the last week. Though stock has gained around 17% in the last week, but looking at the breakout and buying action, we believe that some more upward trajectory is still there for the counter. 140, 145 we are projecting target. On the downside, 129 needs to keep as a stop loss.
All right, those are all the recommendations coming in from Rajesh. Rajesh, hold that thought. We'll talk about specific stocks as well, but just take a look at how the markets have really opened up. Yes, we have opened up with a positive bias. In fact, the Nifty is just around that 26,100 mark. A 30-point up move on the Nifty, while for the Sensex, it's almost a 100-point uptick, 85,150. We are around that level. Mid-cap index also, holding on to some initial gains. The advance decline ratio is also skewed in favor of advances, although it is even Stevens, just about 877 advances to 812 declines on the NSE. Even Stevens for now, but we'll wait for it to settle down to really call it a trend for the day. The mid-cap index, as we speak, has slipped into the red. But let's take stock of some of the sectors then, as to which of the sectors are taking the lead right now. Metals. Dollar index, mind you, is below that 99 handle, continues to weaken. I think that's one reason why metals are among the top gainers. 1% gain coming in on the Nifty Metal Index. IT a close second. After a 3-day slump, IT index has managed to stage some kind of a mild rebound. 0.3% kind of an uptick on the Nifty IT index. Banks are clutching on to mild gains, very flat, but still trading with a positive bias. Real estate, pharma, energy, these are some of the other pockets that are clutching on to mild gains. But let's see whether or not they can build on those gains, or will they succumb to some bit of profit taking. But on the flip side, what's not doing well is the PSU banking index. That's just about the sole sectoral loser right now, down almost 0.3%. All the other sectors, FMCG, etc., are clocking in very, very mild gains. We'll have to wait and see how things progress. It could swing either ways. In terms of the individual movers, let's take stock of some of the key movers on the upside then. Hindalco, that's the top Nifty gainer, but the gains are fairly measured. 1% gain coming in on shares of Hindalco. As I had mentioned at the start, defense stocks will be in focus as the DAC is likely to be meeting today and considering proposals worth 80,000 crore rupees. So BEL is among the top gainers, up somewhere around 0.7%. Infosys, that's also among the top gainers. Asian Paints, Coal India, NTPC and some of the banking names like HDFC Bank are among the top gainers. Titan, I want to talk about Titan. I think it did hit a fresh 52-week high in trade, 4,010. That happens to be the 52-week high on shares of a Titan. It's trading well above that 4,000 mark. It will be opening its first lab-grown diamond store today. So that stock is in focus. The 52-week high that I was talking about was at 4,018 or thereabouts, and it did manage to hit that in today's session itself. Aside of that, some of the other movers include the likes of Trent, Bajaj Auto, some of the other private banking names like Kotak Mahindra Bank, ICICI Bank also doing well, and so is Interglobe Aviation. That's also among the gainers. On the flip side, Axis Bank is the top laggard, down 0.5%. Reliance Industries also on the back foot this morning, down 0.5%. Other IT stocks are gaining, but HCL Tech is among the laggards. I want to see what Coforge is doing after a 4% cut that it saw on Friday. The stock is down another 1.5%, and in the last 5 days it has shed somewhere around 12% or thereabouts. The street is divided as to how this acquisition will really pan out in initial days at least, because it is being touted as a bold move by Coforge, but it has made quite a few acquisitions in the previous years, and that has actually worked well for Coforge. So there are bull and bear cases when it comes to Coforge, and we'll take stock of that. Rajesh, let's talk about Coforge, right? The board, of course, met on Friday to mull fundraise, and of course, it will be raising $550 million via the QIP route. It is acquiring 100% stake in Encora for 17,000 crore rupees, and it will be issuing 9.4 crore shares at 1815 rupees per share to acquire the stake. And the enterprise value would be at $2.35 billion. It will be an all-stock deal. The management commentary is also fairly encouraging. They've said that the revenue run rate is up 5 times and market is up 20 times in the last 8.5 years. And of course, they say that they are recognizing that they are in a new era of enterprise tech. And they also believe that acquisition of Encora is a defining moment for the company. In terms of what brokerages are saying, that some of them say that, of course, most of them have retained their buy call, and the target price is also a little higher at 22.50 if you look at Kotak Institutional. And some of them believe that this will, of course, provide a launch pad to the company for the high-tech vertical and plenty of new clients to mine as well. And of course, Kotak also believes that it is the sharp execution of synergies that will drive acquisition towards the stated outlook of EPS accretion in FY27. Some of them have also pointed out that acquisition will be key going forward to for the acquisition to be really EPS accretive. The stock has shaved off 12% in a matter of 5 days. Would you see that as a buying opportunity? And how would you look at this particular stock on the charts? Any particular levels that you'll be watching out for?
So if I analyze on the long-term perspective, stock is still holding the strength, but on the near-term structure, yes, there is profit taking is happening. And if we go with the weekly structure also, this is the fourth consecutive week where stock is making lower high-low formation, which is a sign of sustained supply pressure. Though there is a volatility in the counter after this announcement, I think looking at the near-term structure, 1600 would be the next level to watch for. That's the major and important critical support area for the counter in this corrective mode. So 1600, if it's able to defend these level, then some pullback action cannot be ruled out, as already third, fourth week correction is already taken place. Long-term structure is bullish. So 1600 is the important level where we are focusing. If it's able to hold, then yes, some pullback trade we can initiate around those level with stop loss of 1560. That's the stop loss one needs to follow. Again, but in pullback, 1700 to 1750 would be the first supply zone for the counter. If at all stock crosses those level, then recovery can continue further. But for pullback trader, buy around 1600 with stop loss of 1660. On the higher side, 1700 and 1750 would be the level where you can review, revisit it, or book profits.
Okay, that's the view on a Coforge. But before I come to Titan, I want to get in your thoughts on Hindustan Copper. Another 8% rally in the last 5 days, almost a 30% kind of a move. And of course, it's moving in tandem with the underlying, copper prices. And even for zinc, Hindustan Zinc has hit a fresh 52-week high as well. Would you be chasing the momentum in these two stocks?
Definitely. So, as we hold our bullish view for metal space at this juncture, the kind of breakout which we are observing on most of the metal stocks, be it ferrous, non-ferrous, I think continuity of uptrend would be there. Hindustan Zinc has already given a breakout on the long-term chart after a long consolidation. So, Hindustan Zinc, if it's able to continue above 620, 615 mark, I think a trend is likely to exhibit on the bullish side, and possible target towards 670, 680 we may see in the near term perspective. Again, the same if I go with the Hindustan Copper, here also trend is on the bullish side, and I think this stock also has potential to extend its gain. Possible rally towards 540, 550 we may see in the near term. On the downside, 495 needs to keep as a stop loss. So I think Hindustan Copper, Hinzing, Hindalco, Vedanta, all these stocks are showing a sign of strength, and continuity of uptrend is there. So I think one can remain on the long side of trade for these counter for near term to short term perspective.
Okay, that's the view on some of these counters that have been clocking in a smashing rally along with those metals as well. But talk about a Jindal Steel. We've seen the stock prices of Jindal Steel take a breather. If you look at the last 1 month returns, down somewhere around 5% or so. Just reading a news flash on Jindal Steel, it will be looking to double structural steel capacity at Raigad unit to 2.4 million tons per annum. But what do you do with some of these steel names, the likes of Jindal Steel, Tata Steel? Would you use dips to buy into these counters? Because metals as a pocket has been doing well, and they have done well, and they've emerged as a pillar at a time when the markets were also correcting. What would you do with some of these steel names?
Yeah, I think it still will also perform. Tata still is showing sign of strength, and again, after a brief consolidation, stock is attempting to negotiate with its 20-day moving average supply zone. Any breakout above 174 can take stock further higher to 182, 185 zone. So Tata is still at this juncture, we are holding bullish view with stop loss of 168. If I go with other steel counter, SAIL is also showing sign of buying interest. So here also one can focus for near-term perspective, as metal as a basket is attracting more buying interest. SAIL managed to view breakout of 20-day moving average supply zone, and looking at the near-term structure, 132 needs to keep as a stop loss to hold the position. 142 to 145 would be the next target for the counter. As you talked about Jindal Steel and Power, stock was in corrective mode, and stock has taken the support from its multiple support area of 980, 975 zone, which is very important and crucial for the stock in near term perspective. So if it's able to, maintain above 975 zone, then some pullback action cannot be ruled out here also. But again, on the higher side, 1020 is the key challenging level to cross. If it crosses, then only we could see some comfort zone for the stock. But time being 975 to 1020 would be the range for the counter.
Okay, that's the view on the steel basket. Of course, we spoke about a host of steel counters, including the likes of Tata Steel, Jindal Steel, and SAIL. But from steel to gold, especially gold and diamond, so to say, given the fact that Titan will be launching the new brand Beyond from the house of Titan with its first exclusive retail store in Mumbai. That will be opened today. The brand, of course, will offer curated range of lab-grown diamond jewelry, marking its entry into the segment. Brokerages are fairly mixed on this particular foray. Morgan Stanley is overweight. Target price is at 4,062. Of course, the stock has cleared that 4,000 level, and of course, it hit a fresh 52-week high today as well. Morgan Stanley believes it is a step in the right direction, and the company remains at forefront of building multiple brands. But Citi is neutral on the stock, although it has a higher target price of 4,125. It says that it does not expect Beyond to drive any meaningful growth or earnings for Titan. And of course, it also says that foray may pose risk as it signals company's admission of lab-grown diamonds being a threat to the natural diamond business. According to Citi, this announcement of foray into lab-grown diamonds is a negative surprise. That's a bull and bear case emerging when it comes to Titan's lab-grown diamond foray. But on the charts, as I was mentioning, it has hit a fresh 52-week high today, and on a year-to-date basis, it has gained in excess of 22%. What are the levels to watch out for now that it has cleared 4,000? Would you be looking at 4,200, 4,100 kind of levels anytime soon, or would you say that the stock is poised to take a breather before it resumes its up move? How are you looking at the charts of Titan?
So stock is in uptrend since last couple of weeks. Stock has attracted good buying interest, and looking at the stock move back to the new all-time high trajectory. I think if it's continues to trade about 3920, 3900 level, I think trend is likely to exhibit on the bullish side. Once the stock able to give decisive breakout over 4,000, 4,020 mark, I think yes, upward trajectory towards 4,200, 4,300 we may see in the near term to short term also. So overall structure is bullish. Derivative data is also indicating that buying interest is there in this counter. One can remain on the long side of trade with stop loss of 39.20.
Okay, that's the view, 39.20, a good support level to watch out for on a Titan. But let's shift focus to some of the viewer queries that are trickling in this morning. I spotted a query on the shares of Saxoft that's coming in from Dheeraj Sharma. Wants to know whether he can expect the prices to go up from here. The stock is at 197, it's down somewhere around 0.5% or so, and we haven't seen very good traction in the stock. If you look at the last 1 month or even the longer term, medium term kind of charts of 6 months, no traction as such. But at sub 200 levels, what are you expecting? Are you expecting any kind of up move, or would you say that the stock will remain in consolidation phase here on?
I think consolidation would be there as stock is not attracting any kind of buying action since last 5-6 months. The stock is in range only, and I think 230 on the higher side and 175 is the downside support area. So I think some more consolidation in this range we may witness for this counter. Until unless the stock not crosses about 230, 225 zone with volume action, the sideways consolidation would be the behavior for the counter. So those who have patience to wait for the breakout to happen, I think then only deploy some long trade, but you need to follow a stop loss towards 175.
Okay, that's the view on Saxoft. Hope that answers your query. Another one I spotted on Sammaan Capital from Harry. Wants to know your thoughts. I think he wants to know the fundamental view, but let's stick to what the charts are suggesting. Sammaan Capital continues to be in the futures and options ban, and of course after that Supreme Court observation, we've seen a very sharp sell-off in shares of Sammaan Capital. Any thoughts how one should navigate this particular counter?
I think because of news flow, a lot of liquidation has been taken place in this counter, and stock has broken all its near-term, short-term moving averages. Still, there is no sign of recovery. Stock already in ban period of F&O. Stock is trading below to 20-day moving average. So I think 150 would be the first level where stock needs to cross. Then only we could see some recovery trade or some unwinding, short unwinding trade to continue. Till the time stock not trading crossing 150 zone, we could see a range bound activity. 132 to 150 would be the range. Either side breakout or breakdown will decide the major direction for the counter.
Okay, that's the view on Sammaan Capital. Hope that answers your query. There is a query coming in from Naveen on the financial space, in the sense that wants to know your thoughts on whether he should shift from Bajaj Finance to L&T Finance, or whether he should consider some other stock. L&T Finance has been a clear winner this year. Year to date gains are in excess of 100%. The stock has doubled. Bajaj Finance itself has done pretty well. But would you say L&T Finance is close to topping out now? And if somebody holds Bajaj Finance, should he really switch to another counter, or should he stay invested?
So throughout the year, it's a stellar rally in L&T Finance, almost 122% gain year on year. Like if I compare with the calendar year, so 122% gain. So kind of rally which we have already witnessed for the counter. Maybe we could see some breather or some consolidation after this strong rally. Possible consolidation in range of 280 to 310 we could see for some couple of week or some couple of month. Then either side breakout or breakdown will decide the final further direction for the counter. Those who are already in the long side of trade can hold the position with stop loss of 285. On the breakout of 310, stock has potential to extend towards 350, 360 also on a positional perspective. But if I have to choose now, Bajaj Finance is also looking attractive. The way stock is consolidating after rally, I think till stock is trading above 960, trend is likely to remain on the bullish side. Once stock manages to give breakout above 1040, here also there is a possibility that stock can extend its gain 1200 to 1230 kind of target on the higher side. So 960 is the stop loss if you are buying here for Bajaj Finance.
Okay, that's about Bajaj Finance and Shriram L&T Finance. I beg your pardon. I hope that answers your query. Let's take up this query on the quick commerce space as well. There's a query coming in from Bharat. He is holding shares both in Swiggy and Eternal. Wants to know whether he should hold or sell. If you look at Swiggy and Eternal on a 1 month basis, Swiggy has clearly outperformed, wherein Eternal has lost some around 5% or so. Today, both the shares are looking at some buying interest. And of course, we also need to remember that F&O contracts in Swiggy will be available to trade from the 31st of December. Plus, there is this competition heating up as well. Sources suggesting that Zepto may have confidentially filed for its IPO as well. With somebody who's holding both the shares, what should the strategy be going forward?
I think Swiggy is gradually showing sign of recovery, and looking at the near-term, short-term structure, stock is moving in upsloping channel. Though 415 to 420 are the major supply zone for the counter, so the major up move will unfold above 420 zone. Once stock crosses those levels, then I think one can add on more position if that breakout takes place. Then target would be around 460 on a positional perspective. But till the time stock not breaking above 420, buy and accumulate would be the strategy. On the downside, 385 needs to keep as a positional stop loss for the counter. Eternal is in corrective mode. This is third consecutive month where stock is attracting some profit taking in the counter. Though long-term structure is bullish, but on the near-term structure, stock is witnessing supply zone. So until the 300 levels not taken out by the counter, I think some more profit taking or some consolidation at lower level would be there. On the downside, one needs to follow a strict stop loss of 275 if you are already on the long side of trade for this counter.
Okay, that's the view. I hope that helps you out. Let's talk about some other queries then. We're getting a query on Poonawalla FinCorp. RJD, I don't really get the person's name, but wants to know that he's been holding Poonawalla FinCorp for the last 3 years. He wants to know for the long term, should he hold or accumulate more in the current position? Looking at Poonawalla FinCorp, it has had a good year, 50% gain, but since October, the stock has seen some bit of correction, corrected in excess of 12%. Would you look at this as a buying opportunity? Should he accumulate more? Or what should he do really?
So I think stock is showing a stable structure, and looking at the short to medium term structure, we believe that till stock is trading above 440 zone, I think there is a potential to extend gain, and 520 to 550 would be the upward trajectory for the counter. So I think yes, one can buy and accumulate. 440 needs to keep as a positional stop loss. On a breakout of 500, one can add more position. Then next target 540, 550 we could see in the short period of time also.
All right, that's about Poonawalla. Hope that helps you out. Let's talk about another query then coming in from Shri Anand Roop. Wants to know your thoughts on Dixon Tech. A forgettable year for Dixon, really. 30% kind of a cut coming in on a YTD basis. The stock has been in corrective mode for better part of the year. Is the correction anywhere near its end, or do you expect this weakness to continue?
Despite stock is in oversold trajectory, and stock has corrected significantly in last couple of months, and for this calendar year 31% already stock has corrected compared to last year. So but there is no sign of recovery at this juncture, and the whole segment is sector is also witnessing same kind of behavior. Though stock is now available near to its important and crucial support area of 12,000 level, which is very important for the counter. If it's break below 12,000, then more liquidation may attract you here, and then 11,600 would be the next target on the downside. So if you want to buy here after this corrective move, 12,000 needs to follow as a stop loss. If this stop loss not breaks below, then some pullback action, as the stock is already in oversold. So some pullback action we may see towards 12,700. That's the first level where one can try to book profit also if you're buying here.
Okay, watch out for levels of 12,700 on the upside on a Dixon, but of course the stock has been in oversold trajectory as well. Last couple of queries then. I think I saw a query from Shweta on an HBL Engineering, which she bought at 886. She wants to know the outlook for the next 6 months. The stock has seen a good rally this year, I think somewhere around 48 to 49% or so, and she's making good profits as well. Would you advise her to book partial profits or stay invested? How should she go about it? She's making good profits here.
Yeah, I think stock is overall in bullish trajectory for near term, short term. If she's already in profit, my advice would be trail the stop loss at 910. And I think if these levels not breaks below, hold the position. I think stock may extend its gain towards the 990 to 1020 also. So where again either review around those level or try to book around those level. At this juncture, 910 needs to keep as a stop loss, trailing stop loss.
Okay, that's the view on HBL Engineering. Last query then from Pannu Anil wants to know your thoughts on KNR Constructions. Anything that he should be doing if he has a medium to long term or he needs a medium to long term view here on KNR Constructions?
So after a long corrective move, stock is attempting to give some recovery from lower level, but still trend is on the weaker side, as a stock is continuously making lower top lower bottom formation on weekly chart, which is sign of weakness on the weekly chart also. Until the stock not crosses above 195 200 zone, trend is remain on the bearish side. So pullback will attract supply zone. At this juncture, the immediate supply is placed at around 185, 190 zone. So if stock able to take out these level 185, 190 zone, then and hold above those level, then only some buying action we could see in this counter. But my advice would be 162 needs to follow as a stop loss, as still trend is on the bearish side for the counter.
Okay, the trend is on the bearish side, 162. That's a crucial level to watch out for on this particular stock. But with that, we've come to the end of the query segment. Hope that helps you out. And if we couldn't take up your queries, please keep them coming in. We'll try and get them addressed tomorrow. But Rajesh, with that, would like to thank you for taking out time and joining in. Of course, I think this is the last time I'll be meeting you this year. So wishing you a very, very happy new year. And of course,
Happy
a
New Year to
prosperous
you
one
also.
at that and a profitable one at that. And I hope to see you in 2026 next. Thanks a lot for joining in.
Thank you, and Happy New Year to you and your team, as well as the viewers of Money Control.
Thanks a lot. Thank you. Well, on that note, take a look at the markets before we bring on board our next guest. A 30-point uptick on the Nifty. Not doing much really. It is expected to be range bound any which ways. This being the last working week of 2025. Mid-cap index also holding out in the green, and the bank Nifty also showing some bit of green on the screen. But on that note, big market voice, let's understand what one should do in 2026. We'll also rewind 2025 and talk about some of the defining moments of the year. Joining me is Feroze Azeez, Joint CEO, Anand Rathi Wealth. Feroze, always a pleasure chatting with you. If we just rewind 2025 a bit, there have been so many defining moments, right? There was a sharp sell-off post the tariff announcement, then the big recovery in global markets, the AI trade, the smashing rally in metals like gold, silver, copper. There was Operation Sindhu, there was the big Air India crash. I mean, this has been, a year where we have seen so much. The list really goes on. Going forward, what, according to you, can be the big defining moment for 2026? I mean, I know nobody can really predict, but going forward, at least from a market standpoint, what, according to you, could be that one defining moment for 2026?
Good morning, Nandita. Like you said, 2025 was quite an eventful year. It made us see a lot of stuff. In 2026, I personally think from a capital market standpoint, every year will have some triggers and some events which will happen. That's how year progresses. But if you ask me what will change the trajectory of this equity markets in 2026, I would say FII is returning, and that should happen. Is my second guess, and I would say that could create a rally which has been waiting to happen. Why do I say so? Is because 2025 has been the highest ever FI outflow. If you see the calendar year 22, FI sold about 1.25 lakh, 1.25 lakh crores, and last year, the year which is going by, they've sold 1.5 lakh crores. The subsequent year, which was calendar year 23, FIs bought 1.7 lakh crores of equity. So point I'm trying to get is when there are steep sell-offs by FIs, the subsequent year there is purchase because the active FIs sell and go. And in the same year, it goes unnoticed, DIIs bought 7.5 lakh crores. As a percentage, now FI outflow being the highest ever is still 15% of the inflow of the domestics in that specific year. This has never happened. In 2000, FIs bought 3,000 crores. In 2003, they bought 30,000 crores. In 2008 crisis, you know how much FIs sold? 52,000 crores. They've sold 3 times that in this year. And still markets have maximum drawn down 8.7%. So I'd say FI coming back would be the defining moment, and that will trigger the equity markets upwards.
Okay, so that's something to watch out for on the positive side. If you look at the FII selling, that has been more pronounced in sectors like IT, FMCG, power, consumer durables, and healthcare. But BFSI exposure has broadly stayed intact. What does this tell you about how global investors are reading into the India story right now, and where do you expect them to make a comeback first?
I think where they will come back will be the passive funds. See what's happened last year also with 1.5 lakh crore of selling. Only the active guys have sold. Passive guys have bought like how. Unfortunately, the active FIIs sell so much that the passive guys inflow seems overshadowed. So where will they buy? They'll buy index. What do they buy? They follow two indices, and people don't even track it. MSCI India Small Cap Index, for example, MSCI India Index, FTSE has a few India indices. Almost to 80-90% of FIs just track these indices. If I ask somebody how many, and I was speaking to a domestic fund manager who has 250 stocks in his small cap index, I asked him how many stocks are there in MSCI small cap index. He had no clue. There are 501 stocks. I asked him, why do you think a foreigner tracks 500 stocks and you track 250 stocks? He has no answers. I asked him, what is the other 250 stocks? Are you not curious to understand FIs are keeping them in the index and you're not? So people are not tracking these two basic indices. So what will they buy? I think passive guys will continue to buy. The active guys will stop selling because they've sold a lot of it. And that's when the positive number will emerge and they will not buy specific sectors. That's my opinion. That's what they've done last year as well. You see the stocks which entered MSCI small cap index with low free floats. They have done beautifully well.
Okay. So if investors were to ask you a very basic question, active or passive, after a year where stock picking was tough and returns were uneven, and now that you say that FIs will make a big comeback when it comes to passive first, which approach do you think makes more sense now? Active or passive?
Well, there's no one size fits all. To my mind, it has to be active. Unless, like US, people keep comparing to US and not even complete the sentence saying that, yeah, US may 90% of the money is index funds. India is 9 lakh crores out of 42 lakh crores. We are just 20%. So unless India's passive AUM crosses 50-60%, you should not be passive. Because passive, the whole engine is, if the money is coming into passive, they're buying the heavyweights. The heavyweights are the top 10 weights, and those top 10 weights do well. There's more weight to them, there's more money to them, more price, more weight. This is the winding cycle which US went through, and that's where index funds are doing phenomenally well. And the smartest fund managers are not able to beat because it's difficult to beat liquidity. Okay, and liquidity chases weights, weight chases price, price chases liquidity. And this cycle is, unless India has not got into the cycle, that's clear. And if you look at the model portfolio, we have operated for the last 11.5 years, it's beaten Nifty 4.12% compounded after feeding my company of 1%. So why would I go passive? If I can still beat Nifty by 4.12, people say you can buy other indices, but 90% of India's passive AUM is in Nifty and Sensex. That's the reality of it.
Sure. Let's also zoom out a bit and talk about the big growth themes that you'll be watching out for in 2026. Where do you think sustainable earnings visibility is really building up?
I think earnings growth visibility is there in A, B, C sectors, that is automobile, banking, and consumption stocks. Auto is again driven by domestic consumption. I am very, very bullish on consumption. And why am I bullish on consumption? Because the prices have not run up. Consumption pillars have been laid by the government. The GST cuts, the corporate tax cuts, which happened a few years back, the direct tax cut has not even percolated down to the consumption it can propel. So I personally think consumption pillars have been laid, foundation has been laid, price has not moved, earnings have not transpired as much as they can over the next few years. So I'd say auto, banking, and consumption will be the places where you will see earnings better than the relative earnings growth, better than the relatively better than the other indices.
Sure, ABC, I think, we've spoken a lot about the ABC of consumption, right? Of investing, right? So in terms of consumption, it's a very wide universe. Where would you really place your bet within the consumption universe? Let's break it down a bit more for our viewers.
I would say non-cyclical consumptions as a theme is one of the best themes you can go for. In fact, there is a fund, I think it's the HDFC fund, which is a HDFC non-cyclical consumption fund, which focuses on consumption, but not the cyclicality, which some stocks or some sectors, subsectors bring along.
Okay, non-cyclical ones, that's where the focus should be. So if somebody is building a mutual fund portfolio today, for 2026, where should they focus for better risk-adjusted returns? Any suggestions here?
Yes, but if somebody is building a portfolio of mutual fund now, and if he's above 30, then I first tell him that he's too late. Stop uh, procrastinating and actually get into it. So that's one suggestion, because quite a few people do a lot of study before they want to even dip their feet in water, and that really destroys a lot of value. Now, having given the philosophical yarn, let me come to what can one do. One, from a risk-adjusted standpoint, can buy multi-cap funds, because multi-cap has the flavor of all three. In our humble opinion, all the three, which is small cap, large cap, and mid cap, are all at a stage of almost an equilibrium in terms of what potential they have in store. A little skewed towards mid cap. Because mid caps have this huge benefit that all different funds buy mid cap, and mid cap there are just 150 stocks. Large cap has some degree of mid cap, multi cap has mid cap, flexi cap has mid cap, of course has mid cap, small cap also has mid cap, but they're just goddamn 150 stocks with $1 trillion free float. So I personally think $1 trillion market cap, not even free float. So there's a lot of buoyancy in terms of P's and contractions not happening. So coming back, I'd say buying a multi-cap would be a good risk reward. And I personally think people should stop getting scared of Indian small caps, because Indian small cap is not the true small cap. It's in the top 500 companies, mutual funds finish all the stocks. 100 large cap, 150 mid cap, and 250 small cap. The rest of the 2000 traded stocks are all considered not even in the small cap category. MSCI has 500 small cap stocks. So don't be too intimidated with the word. English word is still called small cap. But 8-10 years back, the largest small cap was 8,000 crores. Today it's about 50,000 crores market cap.
Okay. Yeah, I think they tend to get a little scared because, if you look at the small cap index, it has lost some around 6% or thereabouts, even though if you look at the headline Nifty index, at least we are ending with gains of some around 10% or thereabouts. So that was one question I was going to ask, but then you've already answered it. Feroze, we cannot not talk about the metal rally, of course, be it gold, silver, even platinum for that matter, and even copper. For an investor looking at this space now, how do you make the most of this rally without getting caught at the wrong end of the cycle? Look at silver. I think we've discussed silver earlier as well, where you pointed out that you prefer gold as a wealth creation asset. But silver, the rally seems to be, not really halting. $83, that was crossed on the silver spot prices today itself. How does one really look at this entire rally? What kind of an asset allocation strategy should one adopt, at least when it comes to some of these precious metals?
Anand, to be honest, coming one small point on the small cap index, like it is ending this calendar year at negative. If you look at the previous year, it makes up for it. Small caps or any equity instrument or a segment of the instrument cannot give you linear returns, right? And that's why you deserve 14-15% return and not 7% return to accept the non-linearity of the instrument. And small caps are a little more non-linear than large caps. Coming back to the metal rally, like you said, it shocked me for sure. Right, the last time we spoke, silver was at $50 troy ounce, if I'm not wrong. So now we are at 77 today, right? 77, 78. That's a large move in a span of a month and a half. But it is to my mind, I have been shocked. And there's one listed company which has silver as a byproduct of their mining. They hedge their positions at $36, if I'm not wrong. So if the guys who do it for a living couldn't guess this rally, then who am I? So point I'm trying to make is silver has this unique attribute of giving 10-year return in 1 year and then relaxing for the 9 years. This is what an investor needs to understand. And then invest or not invest is a separate story. It gave 13 years of negative return in this century. 13 years. But you have the patience to buy at 77 and maybe see 100, sell it off. So it's a trading instrument, not an investing instrument. An investing instrument which has such non-linearity That small cap, we are perturbed by about a 6% negative move for a year. But silver from 2011 to 2024 gave a negative return in rupee terms as well, in spite of the rupee depreciation over the period.
Yeah, that's a very interesting point you made. Of course, 13 years of negative returns, and of course, and as you brought out the comparison with Nifty small cap, 1 year of negative returns, and that has got investors nervous. But let's talk about gold. That is, of course, largely looked upon as a wealth creation asset. The ownership itself is evolving, right? We have digital gold alongside ETFs and physical gold. It's a very basic question that I get asked very often, and I want you to answer it, is the fact that, how should investors think about these newer formats, especially in terms of costs, risks, and regulation? Because, people tend to look at gold investment in terms of physical gold, but then now we have so many other options. What are some of the risks and costs, regulations, etc., associated with them, and should one really look at the other means rather than physical gold?
I think you should always opt for other means, because physical gold is the most inefficient way of buying and selling it. If you buy and store it for your children, grandchildren, then it's okay. The disparity seems to fade off. But if you're looking at buying it and maybe selling it at a point in time and seeing it as a financial instrument or an investing instrument, you should definitely look at ETFs and gold funds. But one thing which you have to always check is what are the premium those ETFs are quoting at. Sometimes what happens is whenever you cut a check to an ETF or click a button and buy an ETF, the ETF needs to actually go buy the physical gold. So if the spot market is not giving, there is premium in the spot market, then it becomes a challenge. So when you buy ETFs, you have to be very careful in terms of buying premiums. There's one client of mine who insisted to buy silver. He was going to buy ETF. I said, I'll not let you buy the ETF, because the ETF was quoting at 20% premium. So silver went up 24%, but the guy made only 4% because the premium vaporized. So coming back, ETF, gold, one check you have to see whether it's quoting at a premium or at a discount. It's generally not at a discount. Sometimes it's astronomical premium. Stay away. Sovereign gold bonds in the secondary market, you will get at some premium. Those are still very, very good instruments, not in the primary market. And if these three are to be replacing your debt component, please don't replace it with your equity component. Even from 2015 till now, it doesn't hurt me as a Feroze. I don't have gold exposure, to be honest. But my IRRs are greater than gold in spite of the rally from 2015. It is just about a 14.5% compounded return which gold has given, even after this rally, for which I had to wait for 10 years. From 2018, it has done well, 16.5%. So use gold as a debt replacement more than an equity replacement, especially at this price, with staggering as a strategy.
All right, that's some valuable advice coming in from Feroze. But Feroze, couple of more questions in terms of your outlook for 2026. Do you agree that the market, while we are expecting FIs to make a comeback in a big way next year, but do you agree that the market may need to consolidate for a few more quarters before valuations become attractive enough to pull FPIs back, and that too in a meaningful way?
I'm not saying they'll come back in a big way. They will come back. When they come back, they are price inelastic. That means if they come back, they don't look at price, they buy and move price upwards. There is 90% index future short position of FII, which will trigger some degree of short covering, hopefully. Second thing is the kind of gamma and delta options book. Now, SEBI actually publishes the delta of the total India's option book. So that's a very useful piece of information which people don't track. So I'm not saying they will come back in a big way. Even if they do come back, the price movements could be larger than the rupee value they bring in. That's my current take. Now, will it consolidate for some more time? The market, in my opinion, the market has consolidated for long enough. I was speaking of 27,000, 28,000 for this year. I was speaking about 27, 28,000 for this year. And that's the number which I'm looking at.
Okay, 27, 28. Okay, that's a good ballpark figure to work with. Last couple of questions then. Domestic flows have been the big shock absorber this year, right? But if, I mean, I know you've given a 27, 28,000 kind of, levels to really work with on the Nifty, but if 2026 for some reason turns out to be a low return year, do you think domestic liquidity itself could be tested? Could that be a worst case scenario to look at for 2026? And I'm at the risk of sounding a bit too pessimistic, but when we talk about the risks going forward, could this be a risk factor that could emerge?
Yes, it can. Nandita, the whole thing is 7.5 lakh crores coming from domestic institutions in a single year, where FYI's maximum sale ever has only been 20% of the purchase they did. Of course, domestic liquidity can dry up, but it looks unlikely because fundamentally, if you look at the small cap inflows, which we track very closely on a daily basis, because that's a barometer of a trend changing. If the trend has to change, the first thing which has to stop getting inflows is a small cap fund. That doesn't seem to be happening. So that can actually be a dent in the market. But what risk are we talking about? If you're talking about 8, 10%, 15% corrections, that is going to happen every year and has happened every year. On 1st of January, if I went back on all the days of 1st January, if I said this year markets will test a peak to trough of 15%, I would have been right 9 out of 10 times. So markets always will give you peak to trough of 10, 12, 14%. Anything more than that, 20, 25% correction is what I call risk. Every year something happens. Every year I don't call that risk. That is an expectation then. So I don't see any sharp moves downwards like 20, 25%. That's ruled out for 2026. And there is a long list of reasons why. I'll not bore the audience with it.
Okay, so on that optimistic note, we will of course be calling it a day today, Feroze. But any advice, any investing advice for 2026 for our viewers, perhaps for those ones who are just starting out on the investment journey, and also for those who are looking to build a long-term, wealth portfolio for the next 5 to 6 years?
I think courage. When I look at the portfolio returns of 2025, the headline number says Nifty did nothing. But actually, from if you remember, or you would not, or on the 4th election day, when Nifty was at 21,000, I tried to give courage to your viewers, saying that Nifty can't go below 21,000. In spite of the